Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of February 16th, 2026. Let's get started. SEAF signals for this week. Energy and industrials are retained from last week, and we add consumer staples. Financials is here sitting at the bottom, and we see a little life on the trading week from technology, but overall extremely still buried from the tactical month and strategic quarter. Utilities looking positive with that nice upward skew from 6 to 4 to 3 from the strategic tactical to trading. Overall score of 13. And real strength continuing in energy with that top score of 3 overall. Let's head into our heat map. Like I said, energy looking really strong. We're seeing extreme accumulation for energy. That's these dark greens that you're seeing for the tactical month and strategic quarter. Was also in the top spot for the trading week as well with 0.33. Well, that doesn't hit our 0.4 threshold. The overall strength of energy through this time period has been really, really good. I mean, really seeing a lot of accumulation. That's when these models really start to take off, is when you're able to build week over week. Industrials was 2s across the board last week. They gave a little bit up on the tactical month, but overall still seeing some strength. The green's not quite as dark as we are seeing in energy, but they are dark. What that means is that's accumulation as well. 0.23 on the trading week. That's a normal weekly trading range for something that's in the top 3. And then consumer staples, again, showing some strength across the board with greens through all 3 time periods. Overall ranking score of 10, which is pretty good for the third. Seeing that positive skew in utilities, third on the trading week. For utilities, that is definitely an up-and-comer. We'll see that a little bit in the rainbow chart, but utilities is a place to watch. Technology coming in at 4th. Nothing really to do here yet. Again, I'll show you, highlight this a little bit more in the rainbow charts, but not seeing much here in technology, even with a little bit of a pop on the trading week. And then financials hits our least spot here with having a negative 0.67 on the trading week. That's a pretty strong outflow. Last week, down 0.3% for the overall total assets under management. That's taking the entire 11 sector spiders AUM. So 2 of the 5 days were down days, with the biggest day being Thursday, negative 1.2% outflow. So money coming out of the 11 sector spiders on net. As you can see there, a large of that was coming here out of the consumer discretionary, communication services, and financials. Money still flowing into these top spots. It's the kind of the interesting part of SEAF is, you can have net outflows for the 11 sector spiders while still retaining some positive flows in the upper bands there. Looking at our sector spider total AUM, we are negotiating that 21-day moving average. This data through this chart is through Thursday of last week, or Friday of last week, and we're negotiating that line. So we did see a slight inflow of assets on popping in on that Friday after the big down day, or big outflow day on Thursday. But we're increasing our touch points here on this 21-day moving average, and that coinciding with the fact that we have been largely sideways since October tells me that all is not necessarily well for this positive rally. Again, this is just one chart. We're not making predictive measures on the direction of the S&P 500 on one indicator, but just the fact that we're hovering and staying so close to this 21-day moving average, and the increased touch points that we're seeing, really going back just for this last year, tells me that there are some concerns here, even though we are nearing all-time highs in terms of the total AUM in the 11 sector spiders. Heading into our rainbow charts, we're going to start with the least here, financials. Financials has really kind of been in a downwards trend, relative underperformance versus SPY going back to last year. We've had little spurts of positive relative performance kind of tucked in there, but overall downtrend that continues here as we are sitting in a void. It isn't as The deepest avoids yet, because technology still holds those spots for the tactical month and the strategic quarter, but trending in the wrong direction. We attempted to make a little bit of a push going back into the end of January, early February, but resuming that downtrend that we've had for a better part of a year now for financials. Energy is our top. We have a nice, strong relative outperformance versus SPY down here. That is corresponding with our top marks. Looks like we had a slight blip here, where it ticked off the bottom. Reminder: this is a daily SEAF score for energy up top, so tracking it on a daily basis. So this isn't necessarily anything other than a blip in one day, but overall really strong in energy, maintaining that top spot. It's as highly ranked as we could possibly get it, and we are seeing that nice strong corresponding relative outperformance versus SPY move. This trend seems to be sticky here for energy. Technology. I just wanted to bring up technology. It's been really kind of in a deep avoid going back for really the entirety of 2026 so far. We did attempt, like I said, saw some inflows this week. Number 4 on the trading week, 0.21% increase in flows. But look where we're at. We're still in that avoid-ish territory. And the reason for that is seeing that tactical month strategic quarter. Now, I'm not saying we can't rebound out of here. We get a couple of more weeks of positive flows. But this thing is pretty buried in terms of outflows. Really strong accumulation of outflows going back in the tactical month and the strategic quarter, and really just aren't seeing, even with that inflow, not a lot on the relative outperformance side, starting to break down to underperforming relative to SPY, going back to November, October of last year. Interesting mark on that is while technology has been either a middle performer or slightly down to performance, as you can see here, the S&P 500 really hasn't made any, we've made little relative new highs, but really haven't gone anywhere. It's very, low percentage in terms of what we've been up since October. And what is that showing? That's really the peak in the relative outperformance versus SPY for technology. So since then, the market really hasn't gone anywhere. Why is that? Technology tends to lead the market. And without this horsepower from tech, the S&P 500 has really failed to make any serious moves since October. Utilities, wanted to look into utilities. Currently 4th on the list, heading into from avoid neutral to favored. I like that positive skew. I've talked about it in the past. What I'm talking about positive skew is we go from strategic lower, that's our lowest number, middle number, and then highest number. I like to see going from 6 to 4 to 3. Anything that shows that positive momentum as we're heading into from strategic tactical trading. The next series of this is sustaining those trading weeks to start to build momentum up through the three time periods. But looking as this thing's edging into favored, seeing a nice bump in that relative outperformance versus SPY. For those a little bit more on the risk aggressive side, looking to maybe potentially take a lead off. This is a really good candidate for a lead off. It is not a SEAF signal, but is doing some positive things. Industrials has been in our second spot now for a couple of weeks. Really nice really nice high overall ranking here for the SEAF model for industrials. Look at that relative outperformance move as this thing is stuck into favor for really going back to October of last year. Touched into neutral, rebounded right away. Nice, strong relative outperformance. Industrials has been a really good place for SEAF to be for this year. Last but not least, third, our SEAF signal for this week. Consumer staples, really strong outperformance versus SPY. Not a lot of any kind of real relative performance resistance levels coming up in any time soon. Shooting up into this middle favored. Again, really kind of just strength across the board here for consumer staples. Greens across the board, 2 in the tactical month, 3 in the strategic quarter. A little bit of a step back in terms of consumer staples for the trading week, but honestly, the flows for 3 through 5 are relatively tight, so really not too much of a differential in terms of seeing those positive flows. And what is really strong relative outperformance versus SPY off of what appears to be a relative performance bottom here that was established in late October, early November, and kind of touched back again in beginning of this year. Seemingly, the economy, especially with technology coming up, stalling out and reversing in October, as we're starting to see some of these countercyclical sectors start to really take off here. Consumer staples showing some strength as we've crossed from neutral into favored. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.